Welcome to Mad Money. Welcome to Cramer. Look, my friends, I'm just trying to make your money. My job is not just to entertain, but to teach you. So call me at 1-800-743-CBC. We meet Jim Cramer. Sometimes you get used to certain stocks being winners for so long that you aren't even aware when their triumphant status possibly runs its course.
Ever heard of Jim Cramer? He's a former hedge fund manager turned financial analyst and TV personality, best known for hosting CNBC's Mad Money. On the show, Cramer delivers stock picks and investing advice with his signature high-energy flair. Think catchphrases like booyah with theatrical sound effects and a style that's as entertaining as it is informative. His recommendations don't just grab attention, they can actually move stock prices, especially among retail investors. This ties into why the topic of public information and markets matters. Today, news, whether from traditional media, social media, or figures like Cramer, spreads fast and wide over a multitude of platforms, shaping how investors buy, sell, or hold stocks. It's a big deal because this flow of information can drive market trends, amplify demand, and even empower everyday investors to challenge big institutions, like what we saw in GameStop in 2021, when Roaring Kitty rallied Reddit users to go against hedge funds. Understanding this dynamic shows how accessible information can shift financial outcomes in our digital age. Now let us look at our experiment. Since data in March is incomplete, we looked at February 2025. Here we can see that Cramer made 50 stock picks in total, with 47 being buy signals and 3 of them being sell signals. Before we look at the actual profit and loss of each trade and how it performed in this month, let's see what assumptions we made. Firstly, our starting capital as 1 million. Secondly, for all buy signals apart from start a small position, 1% of the initial capital is allocated to per trade, while for tickers under a start a small position, it would be 0.1%. Thirdly, we added a 1-day lag to the entry prices as the show is aired after the stock market is closed, and we use the opening price the day after. Lastly, slippage and transaction fees are neglected in the following numbers. So if we look at 1-day change in stock price across the recommendations, or 1 week or even until today, all of his buy recommendations will on average produce a negative return, with the returns being more negative as time increases. The same applies to his win rate. Now let's look at his sell recommends. Could be due to the smaller sample size, Cramer actually got a 100% win rate for his sell signals, and investors will be making profit if they follow any of the trade here over different time periods. So based on the assumptions we made, let's look at the P&L. If we close all positions 1 day after he recommends it on the show, the equity curve here shows that Cramer actually ended up with a profit of $733, which equals to a 0.07% profit. If we do a comparison with the S&P 500, Cramer actually outperforms it in February as it recorded a 0.25% loss. Though no conclusions should be drawn here yet, as the dataset is too short in time and does not reflect the large amount of recommendations over his long career as a TV personality.